So we're going to take a look at three different types of business organizations. So the first is proprietorships, the second is partnerships, and the third is corporations. And we're going to compare them against these characteristics, which is who are the owners, who's liable for what, is it a private company or a public company, who pays the taxes, and does the life of the organization end or does it go on forever? Okay, so I'll just start with a proprietorship. So I'll just use my business as an example. I think once I finished doing my articling, I started my own company, but I wasn't big enough to do bookkeeping, so it was just myself, and I just started out as a proprietorship. So there was only me, so there was one person. Now, when we talk about liability, I'm going to say this is unlimited. So if one of my clients was to sue me when I was doing the bookkeeping, they could actually come after my personal stuff, like my house. They could come after my money. They can come after pretty much anything that I personally own. So they can come after my assets. Now, this is a private company. So that means there's no shares. So somebody else can't buy the shares of this company because it's just private. And I pay the taxes. So when I do my tax return at the end of the year, I would just put the income that I made off of the proprietorship, and then I would pay the tax on that. Okay, and then the life of this is limited. So I can either decide to dissolve it, or if I pass away, then it would just automatically be dissolved. So I don't actually have a proprietorship anymore. Okay, so if you think a couple years after I was doing bookkeeping, I decided that I was getting too busy and that I needed to get a partner to help me with the bookkeeping and also help me with the payroll. So when I did that, I brought in a partner. So that means there is me, my partner, and that's it. But you can actually have more than one partner, okay? And again, the liability is unlimited. So if myself and my partner were sued and we lost, then our clients could potentially go after our personal assets. Okay, and usually the partnerships are private, so we'll just say that it's private. And who pays the taxes? These are paid by the partners. Okay, so I'll just kind of tie these two together. So most of the time a partner is an individual, and if that's the case, then the individual will pay their percentage of the partnership income on their personal taxes. There are times, though, that a partner could be a corporation. So that's why they said usually private. So if they were a corporation, it could be a public corporation, and then the taxation of the profits would still be paid by that partner. But if it's a corporation partner, then they would actually be paying that on a corporate tax return, which is a T2. Okay, and then the life is also limited. So upon the death of a partner, or if we decide to just end the partnership, then the partnership could just not exist anymore. Okay, and then we'll go to a corporation. So I don't know, maybe about 10 years ago, I decided that doing the bookkeeping, we were doing payroll, we were also doing more consulting work and also more accounting work. So I opened up a corporation. Okay, when I say opened up, it was a lot of paperwork. Okay, so now we have shareholders involved. Okay, so now we have one or more shareholder. So in this case, it was just myself, but you could also have other people in the corporation owning shares. Now, here's why a lot of people will decide to do a corporation over a proprietorship, because the owner's liability is limited. Therefore, if I was being sued again by a client and I lost, then they could only come after the assets in my company, they can't come after any of my personal assets. So that's one of the reasons why people choose to incorporate. Okay, so are they private or public? They can do both. So if they're private, they're going to follow ASPE. So you remember the videos we did on GAAP. And if they're public, they're going to be following IFRS. Okay, but what's important to know is when we're doing the taxes at the end of the year, the corporation pays their corporate taxes, and then the individuals of the corporation, they're separate, so then they pay their own personal taxes. Okay, so I'll say this is paid by the corporation. And in this case, the corporation life is unlimited. So you can voluntarily dissolve the corporation, but technically it just goes on forever and ever and ever and ever. And those are the characteristics.